You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
And welcome back to the Option Block. Whose voice is this? This is your favorite voice. This is the voice you've been waiting for. This is Mark Sebastian. I am the Director of Trading at Swan Wealth Advisors, and I am the founder of Option Pit. With me is the Viceroy, the man, the myth, the beard, Alex Jacobson. How you doing, Alex?
Hey, Mark. I'm doing good.
What's going on over there? Anything exciting in the world of Jacobsons?
In the world of Jacobson, no. In the world of OX, two obviously difficult days. Little carnage in momentum stocks last couple of days. It actually looked like we were going to really. I mean, we were up in the opening, and then we got hit. It looked like we were going to rally around 230. Yep. Indexes had a little bit of a pop, but it was momentary. It didn't last. And it's been a rough couple of days. What's going on your end?
Hey, I took my kid to Sesame Street Live on Saturday. Actually, you'll like this, Alex. I bought some great tickets through one of those deal sites, and I get there, and my wife goes, "Well, what's today's date?" And I said, "Oh, it's April 5th." And she goes, "Well, these tickets are for the 6th. So I got to the Sears Center, and I had to buy a whole new set of tickets. But, thankfully we got there near enough that I was able to buy front row seats at kind of at a basically half price because we missed the meet and greet. So my 4-year-old got to sit in the front row and see all the characters, Telly and Grover and all that. Which was great for me to see. The only issue I had is one of the characters gave my wife a back rub, which I was less than enthused about. But, enough about Sesame Street, and let's get on to Wall Street and go right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
And, of course, this is the Trading Block, and this is where we're going to talk about the markets. Alex, you gave us a little bit of a primer. Why don't you give us a little more depth into what you're seeing, what you're thinking, and what you thought of the action across markets?
So both Friday and today, clearly they hammered the momentum issues. And my buddies in the hedge fund community that we kind of still talk every day, we're clearly running from this stuff. And it was broad-based selling. I know a couple people have said this may have been income tax related, but I'm kind of not buying that explanation. Old school companies did okay over the last couple of days. Now, when I say they did okay, they didn't lose much in value. Interesting, three of the names in Idea Hub today. Google has kept the desk busy ever since the distribution, but three of the names were active on the desk today, and it was Google, which was down a little bit, but people are still trying to figure out the distribution. Goldman Sachs, which is one of the 5 equities in premium harvesting in the hub, got hammered today along with many of the financials. And IBM, and I don't know if that's old tech or this was just IBM specific, was one of the few green lights today. It was up over $2. So money seemed to be flowing out of recent momentum, and it kind of looked a little bit today, like I say, around 2:30, like that may have ended. And a couple of the momentum issues actually got a little bit of a bid. Facebook was up, and a couple of the biotechs were up, and they're the ones that had been hurt the worst. But it seemed today to be transitioning money from new momentum back to kind of old school issues. What were you seeing today, Mark?
I concur with you. I was kind of likening it to, kind of we've gone from prove it to people have gone from, will prove it to have proved it stocks. We've seen the S&P outperform the NDX and the RUT fantastically over the last couple of weeks. And, I think people are basically saying going into this earnings, I'm much more comfortable in stuff that I know has performed, I know has earnings, and I know can do well than with some of these momentum stocks that have done just phenomenally well in the market, but maybe have yet to prove it, if you will. I also think maybe Friday was a green light that, the story of the U.S. is a dividend story. It's a story of moderate but not great growth, which is always good for, in my opinion, of a lot of the established, efficient, lean companies, and maybe less great for your breakouts. So I've been calling this the prove it sell-off. The one piece that's kind of interesting is that really the vol products have not really been big buyers of what we've seen. We saw the S&P off back-to-back 20-point days, and the VIX isn't touching 16 today. The one area where there has been some strength is that spread between NASDAQ and RUT vol and S&P vol, which again I think points toward old school companies, established, being a money transition away from a lot of the momentum names. I don't know that Tesla and some of these other names that have these crazy valuations are going to be places to go. And but the one thing I'll say is looking at the spread between VIX and VXN and the spread between VIX and RVX, some of those asset swaps are starting, in terms of vol swaps or something along those lines, are starting to look a little appetizing. What are your thoughts on that, Alex?
Well, I don't follow the spread in vol. Looking at my watch list, the thing that intrigued me today, and I actually would be interested to hear your view on this, is the short-term VIX had a big pop today. What do you make of that?
That's always a sign that I call the VIX. People. I don't think the fear index is really the best way to call the VIX. I think you and I are both in agreement. I always tell people cost of insurance. Got that from you? It's the best way to describe the VIX. But if we were going to give a nickname to the VXST, the short-term VIX, I call it the panic button index. And it's really a grip on how panicked the market is, and to me, has given us a real good clue on where the market is in terms of its capitulation. And I thought that at the peak, the market was nicely capitulated. And so I'm with you there. I think that the market certainly was pointing toward some sort of real panic. So Alex, let me give you kind of what I'm talking about the VIX VXN. So if you follow a simple moving average of kind of the spread between VIX and VXN, typically the VXN, the NASDAQ VIX, has traded over over the last 100 some odd days at a premium about 1.5%. And I'm looking at now a multi-year period, and that 100-day moving average has basically stayed between, call it, coming out of the financial crisis, that 100-day moving average has stayed between about 50 points and as high as maybe 0.75 points. And the highest level that we've traded in the last, call it 2 years, where VXN traded over VIX was about 3.25, call it 3.35. That is until the last couple of days. Guess what the spread was on Friday?
I'm going to guess 5.
It closed 4.83. It hit a high of 6.8.
So is this money just rushing from NASDAQ into blue chip?
Yeah. The spread basically has skyrocketed over the last 3 days.
Do you think this is...
Yeah.
Do you think this is nearing an end, or you think there's more of it coming?
I got to think it's got to be getting close. Even in the midst of kind of the financial crisis, the widest any of these spreads really got. I mean, this is financial crisis wide. I mean, with the VIX, with VIX involved much, much higher in VIX and VXN much higher. On October 13th, the spread hit its call it 5-6 year high in the last 5 or 6 years, and it was about 7-8. So, we're talking a crazy level currently, and I think it's turning into a tradable event, especially now since they both moved pretty close to the same. I think that something along the lines of a dynamically hedged straddle swap or some sort of VIX VXN future swap could be a nice trade.
I am here.
There he is, Mike Tosaw, the man, the myth, the legend. We were just discussing the market today. We were discussing, how it looks like there's been a rotation from new school to old school, momentum to consistency. Did you have any thoughts on what we've seen over the last couple days?
Well, a couple thoughts, actually. Just looking at it, I think that, and I'm sure you guys have already talked about this as well, a lot of the quote-unquote high flyers is where a lot of the action has come from to the downside. People are looking more for a little bit more safety. And so with earnings season upon us, one thing that I'm definitely going to be looking at is seeing what reason do we have for some of the quote-unquote high flyers, the price lines, the Facebooks, things like that to go higher. And it's going to be an interesting couple of weeks. The other thing, people know me, I'm the constant bull. I think this is was another day for the puts with which I was already short, rolled them far anyway. And for some areas with which I stayed open over the weekend, we were able to sell some puts at some pretty attractive levels today. So I think that this is if you're a long-term bull such as myself and you're viewing this with a longer-term set of eyes, I think that this is a tremendous opportunity to buy in right now. Personally, I'd want to see it stabilize a little bit, but overall, I like this opportunity. Frankly, it's a great buy the dip in my opinion.
Yeah, I don't know whether it's a buy or not, but I'll tell you that well, here's a question for you. So you're looking at the market. What parts of the dip do you buy? Do you dip into Tesla, or is this as we saw in like an IBM today, is this a chance to get into some of those stronger companies that have maybe had weak stock performance? I mean, where are you guys? Where are you seeing clients move around money to and from?
Well, let's say a couple of holdings with which we have in general. Just looking at Chevron. Chevron's one where it's the S&P it's not quite down on the year. I'd have to look at it. We're about flat. Are we not? You guys probably have that in front of you better than I do right now. I don't have my trading screen going, but we're about flat. Am I right? After today's low. Okay, so we're about flat.
Flat's off a little.
Yeah, flat's awful.
Got it. But there's still we're just looking at some stocks that we got into. Now, maybe we got into them a little bit at a dip itself a few weeks ago, but just stocks like Chevron, Johnson & Johnson, Intel, just kind of going down the list of like this basket of stocks with which we have exposure to. The only one that's really biting us, and these are all Dow stocks that we're in right now, I'm just going down the list, is Nike. And the rest of them, we're still profitable. I mean, we've lost a little bit over the last few days, obviously, like everything else has. But going through the list, it's not – if you're in quality stocks right now, you're not hurting near as bad as if you were in something along the lines of the small caps. The Russell is getting pounded, the NASDAQ or things like that. So if you're a quality stock person, now's a good chance to buy the dip. But in terms of like the Teslas Priceline, I typically stay away from that, and if I'm looking for a little bit more of a risk appetite, so to speak, leverage it on something with a little bit more high quality and less movement.
Mike, so money ran to bonds today. It didn't run to gold. What are you doing in gold?
Well, we're still right now, the position with which we're in gold right now, we're long GLD, as we always are. We're still long the April 126 put, and the put spread that we're using to finance not April, we are in September. The put spread with which we are financing that is the April 19 bull put spread. So for now, we're still well above our short strike price. So there really was not a lot of action in it. GLD is down 0.5% today. We're still, for a very small portion of our clientele, we're short the SLV 19 puts right now for April. The way with which we just put some stop losses in there for a few clients. They really wanted exposure to silver. So I said, okay, let's have a small amount of exposure, and we put some tight stop losses in there. And so we got out basically above 20, but then to get back in, we sold the 19 puts probably about a month and a half ago. And we're hoping to get it put to us, but it keeps teasing us at that 1910, 1913 level. And we're hoping to go to the well once more with silver again. But as with anything, folks, this is with a very small amount of capital. For larger amounts of capital, for GLD, which we have larger amounts of capital in, we are very well hedged.
Interesting. Are you still long-term bullish on gold?
Yeah, to answer your question, Alex, in terms of being long-term bullish on gold, absolutely. If you look at a 10 to 15-year chart of gold, the pullback with which we've had over the course of the last year or so, or year and a half, it's still a pullback to the longer term. I think that it's still a great opportunity to buy gold at this point, and the trade with which we've been doing that we've been having some success with is just buying longer term puts to protect the downside and selling shorter term put spreads as a mechanism of finance. Now, with that, obviously, as our co-host Andrew would say, you have to do stuff, but it's worked out pretty well so far this year. We've been able to roll down some puts and been able to capture some upside with it as well. So for the long term of gold, I think that it's a very good opportunity. Just bottom line is that we're going to continue to print more money, and there's going to be a need for safe haven in some spots. And I believe that over the long term, gold will be one of them.
Hey guys, I want to pose a question to both of you, and that's with the amount of trading we see in ETFs today. It was a question I actually got from a client. How much of this is exacerbated, these big moves, by ETF rebalancing? Do you have any sort of gut feel for how that impacts the market on big move days like we've had Friday and today?
So your question is, are the people that try to keep kind of the smart beta people, the equal the quarterly rebalanced equal weighted folk, have they had a big effect on the market? Do those ETFs? I'm sure that they help. My guess would be they're more likely to be rolling on this, and the momentum guys actually get in front of them than they are jump in with them than they are to be kind of the exacerbators. So what I would say is they're actually the doers, and then the trading firms, the momentum firms, they are the exacerbators of these moves more than the ETFs themselves. That's kind of my thoughts.
Well, yeah, to answer your question, Alex, I think that the ETFs that actually hold the physical underlying, such as GLD, such as SLV or SPY or DIA, just to name a few, where the stocks or the physical commodity is actually held, I don't think that that's necessarily going to be a market mover in one way or another. But ETFs such as VXX or UNG or USO, to where they're using the derivatives to try and paint a picture, to try to, for lack of a better term, oversimplify things for the person who buys or sells the ETF. I think in those cases, when there's rolls involved, there's definitely something that could happen to it. However, in the ones that actually hold the underlying instruments, I don't think that's much of an issue.
Yeah, that kind of meets up. I probably wouldn't argue much more. I wouldn't argue against anything you just said. Let's kind of move away from our trading block, and let's move into the Xpress Block.
The Express Block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is where somehow Alex manages to get me to shut my mouth for 5 minutes, and we get to listen to Alex really talk about what's going on in the world. What's going on, Alex?
So both Friday and today were obviously very busy days, and we actually saw today some hedges being lifted, some folks who had hedged. We've had sort of a group of clients that have been not believing this market, who were in recent weeks buying SPY puts, buying SPX puts, or buying VIX calls. We saw a little bit of that coming off today, so I think that's indicative that they think this has kind of run its course, or run a good part of its course. As I mentioned, the big name on the desk continues to be Google. And when I queried the desk today, one interesting thing the desk pointed out was that equity options have been remarkably busy, and that both futures and futures options have been a bit quiet in the last couple of days. In fact, Friday's industry volume was, I think, just a tad under 25 million contracts, which is kind of twice the volume the industry sees on slow days in this environment. Average days are still in the mid-teens, but Google has been keeping the desk busy, and regrettably, some of it is still folks trying to figure out the distribution and what's in their account and how options are adjusted. We also had to take Google out of Idea Hub for a couple days while we did the programming to manage with the distribution. But the equity desk was busy today, and as I mentioned, the futures desk was not as busy today. And one way I kind of know that at OX is the futures desk will roll over to the equity desk because they're all futures licensed. But overall, it was a busy day, not an especially good day if you were long, a terrific day if you were short or you were long volatility. And we'll see if this is over with or if it carries over in tomorrow.
Well, that's just great, Alex. And yeah, yeah, we will see if it carries over tomorrow. Well, with that wonderful work of art that was just what Alex discussed, we'll roll out of the Xpress Block and into the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
And welcome to Strategy Block. Again, somehow, some way, Mike Tosaw gets me to shut up and prognosticates on all things that are strategy. Mike, what's going on in the world of strategy?
Selling puts in a down market. Just wanted to talk about this today. Friday afternoon, I was looking at the marketplace and I was thinking, what would Mark Sebastian do going into the weekend? And I was thinking, okay, we've had a little bit of a pullback in the marketplace. However, I thought, what would Mark Sebastian do? And I was looking at it and I was thinking, well, you know what? We could have a gap down over the weekend. And a lot of times when selling puts on Friday right before the close, a lot of times you don't get the full weekend benefit because a lot of the volatility has come out. Now, with that in mind, I wasn't necessarily concerned as much about the weekend benefit so much as I was scared of the potential weekend downturn. So, in my SPY positions, we were long calls. It's a strategy with which we're always bullish on. And the debate was, should I sell some short put spreads going into the weekend to continue to finance these? And I held off on it. And the reason, once again, was not necessarily because of the weekend time decay factor, however that was a factor, but a lot of times during a weekend, bad things can happen. I'm not saying bad things do happen. I'm just saying that bad things can happen. And for that specific strategy, I was resting very easy at night, knowing that the only risk that I had to come to the trading desk to this morning were the long calls and not the short put spreads because they didn't exist as of yet. Now, with that, the concept behind doing it that way is still buying the dip. I love selling put spreads when we have when we don't have them sold already and we get a market like this. So what today enabled me to do was sell a put spread for this week at actually 50 cents less of a strike price than what I would have sold it on Friday because of the dip. So with that in mind, a couple things that I want you to consider with today's strategy block, so to speak. Number one, don't be so apt to sell premium going into the weekend thinking, oh, I will get an extra 3 days of time decay absolutely free. Doesn't work that way. We've talked about that a lot on the show. Don't want to beat a dead horse right now with that. But the second thing with which I want to mention is that as the market goes down and as implied volatility goes higher, that can lead to some pretty attractive put sales to where normally, let's say you're typically selling a put, and I'm just making up numbers here, $4 out of the money or $5 out of the money. When you get a day like today, you're, number one, get a dip in the marketplace, so you can sell the put at an even lower level. But number two, what you have the ability to do is because of the increase in implied volatility, you can sell it an extra couple dollars out of the money perhaps. And it depends on the stock, obviously, and depends on whether you're using this with an underlying index or whether you're using this with an ETF, whatever the case may be. So in markets like this, if you are a long-term bull and you can stomach having it go against you even further, meaning that if you have the ability to adjust the short put, if the market does continue to go down, which we've talked about on past strategy blocks, today could have been a pretty big opportunity to sell a put and or a vertical put spread in one way, shape, or form. So with that in mind, be careful, but also don't just put your head in the sand. There's opportunities out there.
Yeah, to match that point, I'm a get into trades. We try and do our best to kind of you also don't have to jump in with both feet. You can slowly build up a position, and that's something we really work our best to do. And with that, let's roll out of the strategy block and let's move into around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And welcome to Around the Block. This is the part of the show where we're going to talk about what we're watching. And Alex, what are you watching out for over the next couple of days?
So the financials were weak today, and we'll start to get bank earnings towards the end of the week. So we're going to look pretty closely at those. I think the expectation is that the banks are going to disappoint a little bit. Alcoa posts this week, but Alcoa has gone from being a bellwether to I think a lot of people don't focus on Alcoa as much. I think the financials are going to be the big news, and the financials were really a big part of what led the market lower this week. We also saw volatility come back into the debt market and kind of listen to all of us today. And the funny thing is we're talking more blue chips and more kind of quality than we normally talk. But I think that's been the thread in the market lately. It's been the move to quality and this expectation that yields would be a lot higher, and that has not been met. The 10-year is still below 270. I think 6 months ago, we all would have bet with some confidence 320, 330, maybe even 350 at this point. But we saw a rush to kind of old stocks, old industry stocks today. And as Mike pointed out, the oils have done real well. Oils and oil service have done well here with oil. Still at pretty lofty levels. But we're looking at the volatility in the debt market. We're looking at the VIX, and kind of over the shoulder, we're still looking at the Ukraine. That's kind of what I'm looking for in the next week.
And Mike, what are you watching out for?
Well, we got earnings season upon us, as we talked about earlier a little bit. Curious to see what happens there. And then the other thing, with the market at a spot where it is right now, where we are right at around the same level with which we started the year at, it's always an interesting spot for me in that, are we going to go negative? And if we go negative, how much lower are we going to go? Because this is one we haven't had a negative market in a while. It's just kind of a weird thing. But I'm definitely watching to see if we can hold on to the year's flatness now, I should say, in the S&P. I think this is a pretty key spot. And then if the market goes below where we started the year, a lot of interesting things could happen.
Yeah, it's certainly where, the S&Ps are now negative on the year. They close negative, down basically, just barely. And it's just been interesting to watch the way the market has melted this way, this time pulled by somebody else. But every time we've taken these moves, it's been buy the dip, buy the dip, buy the dip, with interest rates still below 2.7, at this 2.7, 2.6 level. You got to think buy the dip. I mean, this is my personal feeling. I got to think that buy the dip is still there. And, I'm going to be interested to see whether it isn't. I have a hard time believing that buy the dip is not going to be there while the 10-year is yielding below 3%. I think as if and when we see yields start to rise, at that point maybe buy the dip becomes weaker. But until then, it's tough not to want to set up some sort of put selling approach. Yeah, I'm watching Fed data this week. I'm watching Ukraine. I'm watching this tech sell-off. We now saw the S&Ps and the NASDAQ move about the same today, whereas on Friday, we saw them move huge. So, that's going to be kind of what I'm watching is how do those two line up? And really, what happens with the VIX VXN spread? I think that swap is going to be an interesting trade. So with that, let's move to the round the block and let's see what's going on with everybody in the world. Alex, what is going on at OX?
Well, the first thing we're going to do is I'm going to put the VIX VXN spread in my watch list. I think that's a keen observation you make there, Mark, and I think it's certainly something worth watching. I never thought of that spread. So events coming up. The $150 Amazon gift card has been extended through the end of the year. If you have an interest in opening an account, come to the site. Actually click on the Amazon gift card. You will see there are some terms and conditions that apply. Live events. Our next live event is April 26th in Schaumburg. Jimmy Ruzan will do his traditional about 3/4 of a day going over the site and how to trade and how to use the tools. I'm going to try to sneak about 5 minutes in to talk about Idea Hub. As I've mentioned a couple times, Hub is going to Schwab Mobile. That should be in this month. Couple webinars Wednesday, the 9th. Nina's going to do collars in IRAs, talking about how to set one up, what you can do in an IRA, and how to use collars for protections. And then also on the 9th, Mike Zaremski, who runs our futures desk, is going to do new customer orientation for futures. And the reason I point this webinar out is some of you are saying, well, I'm not a new customer, but I'm thinking about getting into futures. The webinars are free. Sign up for the webinar. Just come to the site, optionsexpress.com. And if you're thinking of opening up a futures account or beginning to trade futures, it's a great opportunity to spend an hour on a webinar with a very experienced pro and not only get a sense of what tools are specific to OX, but to get a sense of how he trades, how he uses the tools. And it's a great opportunity, and the webinars are free.
Well, that's just great. And Tosaw, what's happening at RCM?
We're recording this show on Monday after the close. On Tuesday, right after the close, at 3:15 Chicago time, we're going to be having a webinar on Condor adjustments. What to do when you get in a little bit of trouble when the market moves a little bit too much. Tune in for it. We're very excited about it. www.rcmwealthadvisors/webinars.
All right. And, from my end at Swan Wealth, we've got a couple new products in the pipeline that I'm not able to announce, but we're amidst our big capital raise for Swan Re, which is our reinsurance company. And at Option Pit, we should be launching a new, the new gold course should launch tomorrow probably. And there will likely be a chat in the next couple of days. So all kinds of exciting stuff happen on both fronts. I love how things are going at Swan. So that's been it's really fun. So with that, a little shorter this time, maybe because we've got a third or 25% less wind, and we hope you enjoy the show, and we will see you next time on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.